Greetings, everyone. I'm excited to welcome Gilad Uziely, co-founder and CEO at Sequence. Gilad, welcome to the show.
Thanks, Ben. Great to be here.
Hey, great to have you here. Looking forward to this conversation. Let's start things off. Tell us a little bit about your background.
Sure. Born in Jerusalem, in Israel, raised in Tel Aviv, went to university in Sydney, Australia, lived for a few years in Italy, and now I'm back in Tel Aviv, married to Rebecca and the father of two daughters. Throughout my entire career, I'm almost 45 now, and I had like a W-2 or a payslip for maybe 2 years out of my entire life. So I've always been mostly like the vast majority of my adult life been doing my own thing and building business.
Okay. I was going to ask if there's a corporate piece to that, but it sounds like not too much, but really just a serial founder.
Yes, and by the way, not necessarily startups or
Mhm.
I founded with my girlfriend, now my wife, a travel agency. I've done some real estate. So all kind of things, not necessarily tech, although in the last 10 years, I've been doing mostly tech startups. I think that the main reason for that is that the huge impact that those businesses can have. And that's something that gets me excited.
Yeah. Yeah. No, interesting. And so of course tech focused right now, but do you have other businesses going as well, or just focused on Sequence right now?
So we have two like small hotels in Italy, actually.
Okay.
And that's something that is very close to my heart. I love hospitality. And so I let my wife to do all the hard work. So she's the one who actually manages that, but I'm part of it, obviously.
Oh, I love that. So two hotels. Yeah, I think that's the first time I've heard that from a founder. The tech side and then hospitality, which is great. Well, let's talk.
That's the plan. If I'm gonna have like a huge exit, or the company is gonna close down and not be successful, I'm anyway gonna go and work in my wife's hotel. That's the
Yeah,
plan.
yeah, she'll put you to work.
Yes, exactly.
Yeah, I love that. Well, let's talk about the tech side. And now, but before we talk about the products and services, and is the company called Sequence or Get Sequence? I just want to make sure I've got that right.
So we call it Sequence, but
Okay.
mine is getsequence.io.
Okay, perfect. Well, yeah, let's talk about Sequence. Tell us what products and or services it offers.
Absolutely. So the origination story of Sequence is kind of interesting, but we can get into it later. But basically, what the best way to describe Sequence is Zapier for money. We allow both consumers and small business owners to connect all of the different places in which the money lives. So anything from crypto wallets to 401ks and anything in between, right? So credit cards, mortgages, loans, depository accounts like checking and savings, Venmo, PayPal, anything in which people have money, and we allow them to create rules and automations between all those different accounts. So basically, program your money.
Okay. So you have the B2C plays, so consumers, so just individuals plus B2B. And so really a big picture is just to help them manage their money better, just know where it's coming, where it's going.
Yeah, I think that the opportunity that we are tapping into and has nothing to do with us or with external forcing factor is the fact that our financial stack, both as individuals and as businesses, went through a massive unbundling. Right. So today, the average American has 15 different places in which the money live, and the gap keeps growing. And that that fragmentation of account makes it very hard to follow all the different places. It makes it even harder to manage it. And it's literally impossible to make smart financial decisions in contact because all of those services are siloed, right? They are not talking to each other. And that's exactly where Sequence comes in. And we like to think of it as the connective tissue of all your money.
Okay. Yeah, that makes sense. And that's on the B2B side, who are you targeting? Because you mentioned small businesses and solopreneurs on your LinkedIn profile. So who is that sweet spot on the B2B side for you?
So after going after several different types of customers, we came to understand that the very best customers are those like small or even micro business. So 1 to 10 employees, usually what they will have in common is that they will have like multiple income streams, right? And fluctuating income. So we get to see a lot of real estate agents, short-term rental businesses, franchise businesses, and people that are doing anything from gardening and landscaping to moving, and then obviously lots of tech folks, designers, small tech shops. So just a very wide variety of different types of business that are just trying to make the most out of the money. I'm sure that the band that you're very well aware that most people don't start a business because they want to deal with accounting and cash flow, right? But it's something that you have to do if you want to be successful. So we are taking a lot off the plate just by automating whatever strategy they want to implement.
Yeah, I mean, yeah, and usually at that size, say 1 to 10 employees, usually it is the owner, the founder taking care of the, the finances and the accounting. And I'm curious, so your platform, is it meant to be like, say, an accounting platform to produce financial statements, or is it meant to be more of a holistic picture of just, all the where the money is and where it's flowing?
So I think that although I don't think I know that what is unique about what we've built is that Sequence actually starts where all other PFMs, like personal finance management tools, ends, because all of the other tools out there, which are great, they are all passive. They don't move the money for you. We actually do the execution. We move the money. We are executing your plan. And that's the big difference between what Sequence does and all the other amazing tools that help you plan, budget, see what is happening. We actually do it for you. And just the other day, one of our customers told me that he thinks of Sequence as a fitness app that goes to the gym for you, which is something that I like hearing.
Yeah, I love that analogy. Well, I wish I could find that app. So, but on the business side, we may have found one. So this really resonates for me because, I have multiple revenue streams and it's hard tracking, kind of like, hey, revenue coming from here, the expenses, tying that all together. So it makes sense, especially for these micro and SMB businesses who really have to kind of, do it themselves and maybe don't have budget to hire, especially a CFO.
You have to do that, and you also have to do marketing and sales, and you're wearing so many hats. And by the way, the business owners that use Sequence, they manage both their business finances and their personal finances on Sequence. So they will bring their spouse, wife, husband, whatever, and their business partner. Many of them will invite also their accountant or their financial advisor, right? And it becomes also a way for people to communicate about their money.
Well, I'm definitely intrigued myself for personal business reasons. And so where's your user base right now? So going after micro and SMBs, but where does your user base, geographically?
100% US, because what we actually do on the back end is that when you onboard into Sequence, you go through KYC or KYB, which means that we actually open a bank account for you. It doesn't act as a bank account, but it allows us to be able to move money in and out from all the different accounts that you have. So we are fully FDIC insured, regulated. We work with a bank. So just making sure that everything is safe and nothing can get lost.
Okay. And so one more question here about the product. So thinking about the tech stack, so 100%, US based users, and thinking about, say, a solopreneur micro business tech stack, right? I've got maybe QBO or Xero or accounting solution. And it sounds like then this is, plus bank accounts and credit cards, personal business. And then we've got Sequence that's sitting within that tech stack of a small business owner. Okay.
Yeah, exactly. And we connect to all of it, right? We connect to your QuickBooks, we connect whatever it is that you are using. And in the end of the year, we allow you also to export or whenever you want, right? Even every month, to export everything to your CPA, your bookkeeper or whomever. And we've actually done a lot of work to make the reports as customizable. So different bookkeepers or accounting firms, they want the reports different ways. We cater for all of them.
Yeah. Yeah. And I love that because, your CPA or tax CPA, wants this information, as you progress through the year and then filing your taxes. So love that. Mm-hmm. So let's talk about your fundraising journey here. But first, what year did you found Sequence?
So Sequence, mid-2023, but it rose from the ashes of our previous startup. So we actually have quite often an interesting pivot story. And if I can talk about it.
Pivots are always interesting. So it sounds like, founded 2023, was that the pivot or was that pre-pivot?
So that was the end of the pivot, actually. We started a company in 2018, the end of 2018, called Lens. And what we did with Lens was a bank that was geared toward the self-employed. And it came out from actually us talking to our customers, but not really listening. Because we've built a set of tools before that, just like as I said before, like taxes, right? You could see how much money you owe in taxes and your your accounts. And our customers told us, this is really cool. Customers, they were users because they weren't paying. And this is really cool. I want to be able to move the money. And then we said, if we would have listened then, we would have built Sequence then, right? But instead of that, we said, okay, they want to move the money, we have to be a bank. So we built a bank and raised $8 million for that, onboarded over 30,000 customers. But in the end, it failed. And it failed because we tried to build a bank or a finance company using embedded finance tools. And the unit economics just didn't add up. And once we understood that, we just stopped, continued serving, obviously, the customers that we had because we had to, because we were a bank, and then started thinking about whether we should give money back to investors or to try and pivot. And we decided to try and pivot. We didn't really know what we were getting into. We just thought about like two core principles for our pivot, or what was important for us. And one of them was we wanted to get to conviction, strong conviction as soon as possible, because we were all three co-founders over 40. And we wanted to make sure that we are building something that is both meaningful and with chances of succeeding, and something that we want to invest the next 5, 10, 15 years of our lives building. And the second core principle was no more red oceans. We were looking for a blue ocean, right, with not a lot of competition. Because in the previous slide, you came to people and told them, like, remember Bank of America that you've been with for your entire life? Ditch it and come to us. And that's not where you want to be as a small startup.
Yeah.
And then we just started doing a lot of interviews, a lot of exploration, and we went back to Lens, to our previous company, best users, and we told them, why are you here? What is it that you love so much about the product? And in Lens there was like some automations, it was like a mini automation within the account. And after talking to them, we realized that that's what they really, really liked about it. And we decided to focus only on that and build the product around that.
Yeah, I appreciate that insight and sharing that. And one more question before we talk about fundraising is, it can be hard for a founder to know when to shut down or to pivot. Like, was there a clear message where you just reached a point that said, like, hey, we've got to pivot? Or was it just over time, that led to that pivot moment?
So I think that the answer to that is that it took time for us to understand that we are basically, like full gas into a wall, right? And the reason is that the biggest problem with what we try to do is, like, as I said before, we were using embedded finance tools to build a finance company. And then what happens is you can't really make money because you can't lend against your balance sheet. You can't make money like a bank, right? But you get all the downside: fraud, chargebacks, disputes, and fraud being the biggest problem. So what happened is that you would onboard like a cohort of users for the month of May, whatever, and you thought that your customer acquisition cost was, let's say, $100. But the more time goes by, you understand that like a big portion of that cohort was fraudulent. You had all the accounts, so the customer acquisition cost kept going up, and then the payback period kept getting longer. And we just said that basically it took us some time to understand that with every new customer that we onboard into the platform, we are basically shortening the lifespan of the company.
Mm.
And it's a very, I remember the day, clearly. And it's a very tough place to be. You feel like a complete failure. It's to be honest, one of the worst days of my life. Because you're saying, like, we're screwed, basically. And you have to go and communicate to your employee, to your investors who believed in you and gave you like almost $8 million. It's a lot of money. So it's not fun.
Yeah, and I appreciate you sharing that because we always hear about success stories, but not often do we hear about pivots behind the scenes and just those tough talks. So I appreciate you sharing that. And let's talk about fundraising. So you mentioned 8 million. So have you raised 8 million to date now?
No, 8 million was for Lance. For
Okay.
Sequence, we've raised another 15. So we had a seed round of $15 million. And I also there I have like a kind of a painful story because we started the pivot. We started thinking about Sequence within the Lens, under the Lens umbrella. And we had a lot of investors there. We, I, as the CEO, managed to create a very complicated cap table. Uh, Basically, was very bad news for us. And what happened is that we started the pivot. We started seeing initial signs of something for Sequence. But it was still under the Lens umbrella, right? So I went back to the Lens investors and I told them, listen, there's something here. And that was 2022, right? It was like the worst time to fundraise. So my investors told me, listen, we're not going to invest anymore. That's it. And so I said, okay, let's go and save the company. That was, that was my goal. So I pitched 160 investors. And most of them told me like, we don't do fintech, we don't do consumer fintech. A few of them gave me feedback that basically was like, what you're trying to do is not going to work, basically, which is a fair feedback. Then a few also like good ones that I really wanted to invest, that I wanted them to invest in us. Saw the cap table and told me, listen, man, we like you. There's something here, but I'm not going to touch this. And I was very lucky to get 2 term sheets from two amazing investors. And it was just amazing to see how one of the partners at Aleph, with Tel Aviv-based VC, went full steam ahead with full conviction. And it was just amazing to see because he immediately saw the potential of what he thought that is interesting. And it was like, it's the first time that I saw like such a strong conviction. It was first very encouraging to me as a founder. And also he, kudos to him. He forced us to do a complete restructure of the company because the old company was like the cap table was just too complicated. So what we had to do is to start a new company that bought assets from the old company for equity in the new company, which means that I had to go and collect 83 signatures on waivers from employees, accelerators, and everyone who ever gave me, money into the previous company. And they wanted us to get 95% of the waivers signed. And I'm proud to say that we got to 100%. It wasn't easy. It took us 7 months, but we came out from the other side with a brand new company, clean cap table, great investors. And I also think that our investors did a pretty good deal because they took a very experienced team at a seed price.
Yeah, and yeah, so that's a lot of signatures to chase. But so started the new company, got assets and got equity for the previous investors. And so, but raising again and raising 15 million. So did you know, like, all right, we're going to pivot, and you said you finished the pivot at end of 2023, that, all right, I don't know, maybe there was enough cash in the bank, but you're like, hey, like, did you say like, I want to raise again because we need to raise capital in order to achieve what we want to do with this pivot?
So when we started the pivot, we had like around $2 million in the bank, more or less. And just because it was very hard to get everybody's take, it took us the time for me to go and talk to less investors and all like external investors and also continue building a Sequence under the Lens umbrella. It took money that when we got the term sheet, there was almost nothing left in the company. And the term sheet was for 5 million. Then we pushed it up to 7.5 at the end. But the term sheet required the restructuring. So without the term sheet and without the conviction of the investor, we would have never been able to do the pivot basically, and to do all the transaction of buying assets and all that. So
Yeah.
it was a condition, right?
Yeah. So quite the journey. And so tell us, well, probably a lot of lessons learned in this process and fundraising lessons learned. But looking back, and for the founders out there who may be, going through a pivot or some harder times, any lessons learned that you'd like to pass on from this experience?
First of all, it's hard. It's really hard. I've been in it's a tough period. Make sure that you are not alone. Make sure that you have someone to talk to. People can reach out to me if somebody's feeling the need or going through like something, like a restructuring, down round, pay to play, whatever. So make sure that you have people around you that you can talk to. I think that one of the people that I worked with told me something that is very well with me, and he said, we always imagine the worst scenario. You always think it's going to be like, the end of everything, but it never is, So try it. It's hard. It's easier said than done, but just remember that you'll come out on the other side, like one way or another. So don't exaggerate with the negative feelings.
Yeah. All right. Well, yeah, I appreciate you sharing that, because you think, hey, this is the end, but there is, something after the end. So appreciate that. So Gilad, let's switch over the go-to-market side. So going after B2B, B2C, I don't know if that's the same go-to-market motion, but how are you finding your customers, users right now?
So going back to where we started, I think that we came to this venture trying to be humble, because we just took before that took a massive beating. We thought that we are super smart, and we turned out to be stupid. So we came to it very humble, and we said, okay, we don't know who is our ICP. So what we did is we opened as wide as possible. We let everybody in, anything from, pure W2 all the way to like bigger businesses, with the only condition. And again, this goes back to getting to conviction. So we said, no free tier, no free trial, no freemium. You have to pay from the very first second, because we wanted to see that people are actually willing to pay for it, right? And once we got to, I think it was like maybe 500 paying customers, we started looking at the data. And the data was extremely clear that our best customers are those like small micro businesses. And when I say, when we looked at retention, that was way higher. We looked at how many people they bring onto the platform or invite into the platform. So like some kind of, I don't know, maybe not virality, but some kind of virality. And then it was just like 2.5 times the value, like the monthly revenue for those guys. And then what we did, we just switched marketing and messaging, and the messaging was all about managing your business finances as a small business. And we grew from $200,000 in ARR to $1.5 million in ARR in like 10 months.
That's great. That's great. So yeah, nice. Yeah, it's so interesting, right? Using the data, figure out your ICP, and then go after that ICP, which a lot of marketing teams are, striving for. And at this stage in your journey,
you need
a little luck, a little trial, experimentation, definitely. And, at this stage in your journey now, a lot has happened, pivots, fundraising, now managing the business, managing sequence. Do you have a favorite number or metric that you use to guide the business right now?
Yes, I have a bunch. So first of all, for us, the most important thing that I look at isn't like vanity, like ARR and stuff like that. I look at payback period. I'm trying to build, or I'm building together with my co-founders and team. We are building a business that will reflect our personality, which is resilience. We want to build a healthy, resilient business that can go through hard times. Thank God, to date, Sequence has been going up and to the right, but we want to build something that will be able to endure also tough times. So obviously growth is the most important thing for us. I also look at payback period. I look at healthy margins. I look at ROAS. I look at all kinds of things to make sure that we can cross any hurdle that we come across, and we will come across for sure.
Yeah. Yeah. A lot of metrics right at this stage. I'm curious, for CAC payback period, what's your target? What's a good number for you that you're targeting?
So 8 months, 6-8 months will be outstanding. And it's a number that every company needs to have. Like what would be amazing for me would be really bad for other companies. And so you need to find the payback period that is right for you. If you're the more consumer you are, the shorter the payback period should be.
Yeah.
The more enterprise you are, it can be longer because the churn is very low. So you have to find the right number for you. I'm lucky to have investors that guide me very well in what to look at and benchmarks. So try to get those numbers from your network.
Yeah. 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 I appreciate that insight. And for listeners, I also have another podcast called SaaS Metric School, and I just covered payback periods and benchmarks. And you're right. It depends on your price point and ACV that, best in class could be 6 months. And if you're enterprise, up to 24 months, so you got to make sure it's not just one payback period fits all, everybody, which.
Yeah. And also like NRR, right? So if you're really good at upselling, which Sequence does very well, then you can allow yourself to have like somewhat of a longer payback period, right?
Yeah, and especially if you have good retention. So let's talk a few stats and figures here. You're based in Tel Aviv. Is the company based in Tel Aviv?
The company is a US based. It's a company.
Okay, US based company. Okay.
Oh,
And then what's your current team size?
25 people.
Okay, 25. And then you mentioned 1.5 ARR before. So is that where you're at now, or are you beyond that?
Just slightly higher.
Slightly higher. Okay.
Like 1.6. Our goal is to close the year with to double before end of year. So to pass the $3 million ARR by the end of the year, and it's doable.
That's great. Yeah, I love that. Okay, so around 1.6, hopefully double that, get to 3 million by the end of the year. And really appreciate your time sharing your journey today. So what's coming up next for Sequence?
I always look at trying to stay very close to the unit economics equation. And we are now hyper focused on pushing customer acquisition costs down through partnerships. So we're actually now starting to work with financial advisors and RIAs, because one of them told us that Sequence is the last mile of financial planning, because we can actually execute the financial plan. So that we are working on partnerships on that side to lower our customer acquisition cost. And on the other side, we're working on a few really cool partnerships with banks and with bookkeeping companies in order to inject that into our platform. So people will be able to open health savings accounts straight into Sequence, connected to all the flows, and make sure that their emergency funds are also making money for them.
Okay. Yeah. Yeah. So a lot of good stuff to come, especially partnerships, always an interesting channel. Well, really appreciate your time today, Gilad. And if listeners would like to learn more, where should we send them online?
So getsequence.io, that's our website. We have a really cool YouTube channel. So if you want to see everything Sequence, you can see it there. One of the most exciting things about Sequence that we didn't talk about until now is our community. We're super engaged, super smart group of people on Discord, like thousands of people that are really welcoming. And I invite anyone who's like Sequence curious to join us.
All right. Well, perfect. So if you'd like to learn more, check out getsequence.io, check out the YouTube channel, plus the community. And Gilad, really appreciate your time today and sharing your journey.
Thank you. It was awesome. I enjoyed the conversation.